Thank you so much for your time on the show today, Bosun. I understand first that there's a bond auction happening today.
Thank you for having me, Kenneth. Can you hear me?
I can hear you clearly, Bosun. I'd like to speak on the bond auction today and what are your expectations?
Okay, so today we have a bond auction coming in, so where DMO is expected to, DMO is voting 25 billion on the 2026, 40 each on the 2035, 2045, and 2050 bonds. So today, because of the drop in the MPR by 100 basis points yesterday, so we expect the stop rate to actually come down by at least 30 basis points on across all the tenors. So we expect the bond to be oversubscribed because currently, if you look at the rate at the OMO and NTB space, it's quite unattractive. So the only place where you see the PFAs and the asset manager putting their funds currently is in the bond. So we expect more subscription on the short end of the curve, which is where we have seen major people playing. So currently, at the last auction, it was 6.7 on the 2026, 9.35 at the 2035. But we expect this to come down because those bonds are actually at 5% level. So we expect more concentration on the short end of the curve, in line with what we saw yesterday at the decision of the FPC yesterday.
All right, an interesting week we've seen so far in the market. I'm starting first with that surprise rate cut we saw from the central bank and also the adjustment of the corridors around the MPR. Did you think that decision was going to come from the central bank, and what do you make of it?
So the rate cut by the MPC yesterday, it was in line with the CBN policy to actually boost the growth in the real sector. So before now, you see most banks trying to actually put most of their funds in treasury, but now they are forced to actually lend to the real sector so that they can actually drive growth, which has actually been what Stephen has been trying to actually ensure that the economy grows so that we don't plunge into recession. So I expect this to actually force many banks to actually start looking at creating more risk assets so that at least if you look at currently the long gains for homo today, we are seeing 1.5%, which is quite attractive. So and given the drop in the MPR as well, so it actually has an impact on the savings rate, which reduced by 10 basis points before now. So you can put your money in the bank, you get about 1.25%, but now it has come back to 1.15%. So this will actually force more customers to actually think of investing more, putting more money in instead of putting the ID fund in the bank. So I expect the reduction to actually support growth in the country.
All right, but when you look at the decisions before the MPC, before they came out with their announcement yesterday, FX stability has been one of the major issues that we've been plagued with in the markets here. And part of the readings from the central bank governor yesterday was the MPC said that the management must take bold action to stabilize exchange rates. And for you, what's the outlook on the Naira in the near term?
Okay, so actually on the Naira, if you look at the investor and exporters windows, people are actually doing a lot of intervention to actually defend the Naira. So the investor and exporters window, CBN on the 31st of August started clearing the backlog of FX demand for foreign portfolio investors. So they've sold at about 150 million in the last 10 days. We have a 386 spots and a combination of 4, which is a 150 day forward. So I expect this thing to be sustained. Today, CBN will actually inject funds into the market for clearing backlog of FX demand for offshore. And on Friday, that would be retail SMIS intervention. We are CBN has been pumping at least 300 million on a weekly basis to the system. And yesterday, too, the CBN sold about 100 million to the PIT for PTA, medical payments, and SME. So I expect all this central intervention from CBN to actually bring stability in it. Although in the next time, I don't expect much liquidity coming into the system. If you look at the OMO rate, it's quite quite unattractive for the offshore at the moment. So the rate will still be at sub 390 levels in the meantime. So I expect them to actually sustain the intervention, which and the come up with different policies that will actually drive growth and encourage more inflows from the foreign investors.
All right, very interesting times we're looking at, especially when you look at how inflation is going on. The CBN earlier mentioned that they expect inflation to be about 14% when you look at the end of this year, and CBN earlier had mentioned that inflation around 14% would be growth retarding. But for you though, what's your outlook for inflation going on, and how do you think that plays into the market that we're working in?
Okay, for me, if you look at the inflation currently, if you look at it, the major component that has actually caused this growth, this increase, has been food inflation. So it's not as a result of maybe you have maybe too much money in the circulation. And I expect them to actually come up with a policy to actually mop up excess funds from the system. For me, I expect inflation to actually get to as high as 14%. If you look at the regulation of the rates for the electricity and all that, and I expect inflation to get as maybe 14% by December. But coming next year, I expect a downward trajectory. But in the meantime, I expect inflation to actually to increase, not because there is too much. It's not caused by monetary pressure. I think it's because of the other activities. That's what's possible. So I expect it to actually go up. I expect maybe they will come up with different ways to mop up excess of state by CRR and the head here by this Friday. And the excess that we have in the system, you see a lot of money will be mopped up from the system by CBN. And by next week, the head here, any bank that does not meet the 65% head here, you see CBN tend to mop up other funds from